You think the money in your bank account belongs to you. You look at that balance on your screen and you see it as property, something you own. But you're wrong. That number isn't property. It's an allowance. It is a permission slip that is granted to you by a very small group of companies. And the terrifying reality is that this permission slip can be revoked at any moment for reasons that have nothing to do with the law. We are watching a silent war unfold. It's not being fought with subpoenas or police raids. It's being fought with merchant category codes. The latest casualty in this war seems insignificant to the average person. It's a niche industry. Independent adult video games. You might scoff at that. You might think that what happens to developers of risque visual novels or anime games doesn't matter to you or your portfolio. But you would be making a grave mistake. Because what is happening to these developers is the beta test for a much larger financial control grid. This is a story about the weaponization of the payment rails. It is about how two companies, Visa and Mastercard, became the unelected regulators of the internet. To understand this, we have to go back to a concept called Operation Choke Point. This was a Department of Justice initiative launched in 2013. The goal was ostensibly to fight fraud, but the method was insidious. The government pressured banks to cut off financial services to high-risk industries. These weren't illegal industries. They included payday lenders, gun shops, and coin dealers. Perfectly legal businesses that the administration just didn't like. Operation Choke Point supposedly ended years ago, but the infrastructure it built didn't go away. It was privatized. It was absorbed into the banking compliance departments. Now, fast forward to today. The target has shifted. The crosshairs are locked onto independent creators, specifically in the adult gaming space. This sector is dominated by solo developers. They aren't big corporations. They rely on platforms like Patreon, Subscribestar, Gumroad, and Steam to survive. But recently, the ground beneath them started to crumble. It started with a subtle change in the brand protection policies of the major card networks. Visa and Mastercard enjoy a global duopoly. Between them, they control the vast majority of all card transactions outside of China. They are the toll booth. If you can't process a Visa card, you don't have a business online. It is that simple. You are effectively exiled from the modern economy. Recently, these networks decided that certain types of legal content were a reputational risk. They didn't cite specific laws. They cited standards. They began pressuring payment processors. Companies like PayPal and Stripe were told to purge specific types of content or face massive fines. The fines are astronomical. We're talking about potential penalties of $25,000 per violation. That is a death sentence for a processor. So the processors panicked. They didn't have the time or the manpower to review every single game or piece of art. So they used a sledgehammer. We saw this with Gumroad. Suddenly, entire libraries of anime-style art and games were banned. Not because they were illegal, but because they were risky. The guidelines were intentionally vague. Terms like sexual violence were expanded to include almost any conflict in a fictional narrative involving adults. This is where the financial insider angle gets interesting. This isn't just about prudishness. It is about the cost of compliance and risk management. For Visa, processing a $10 transaction for an indie game isn't worth the headache of a potential PR scandal. So they simply cut the line. But here is the trick. They don't ban you directly. They make it impossible for you to operate. They force you into a high-risk category. Being labeled high-risk changes everything. Your transaction fees skyrocket. You might pay 10% or more just to process a payment. You are also subject to rolling reserves. The processor holds on to 30 or 40% of your revenue for months, just in case there's a chargeback. This creates a liquidity crisis for small businesses. You can't pay your rent because the bank is holding your own money to protect itself. Then there is the issue of the merchant category codes, or MCCs. Every business has a 4-digit code that tells the bank what you sell. The card networks have specific codes for adult content. If you get tagged with that code, many banks will automatically decline the transaction. It's a soft ban. The customer tries to buy your game, and the card is declined. They call their bank, and the bank blames the merchant. This drives up the decline rate. And if your decline rate gets too high, the card networks use that as justification to terminate your account entirely. It is a self-fulfilling prophecy. They make it hard to pay you. Then they ban you because it's too hard to pay you. It is a perfect, closed loop. And we saw this accelerate with the attack on Subscribestar. This was a platform specifically built for refugees from Patreon's censorship. When Subscribestar started gaining traction, PayPal pulled the plug. Then the card processors followed suit. The platform was nearly destroyed overnight. Why? Because it allowed content that the mainstream processors deemed harmful. Again, not illegal. Just outside the Overton window of corporate safety. This brings us to the anime ban. This is a very specific, coordinated attack on Japanese-style art. The card networks have decided it's too difficult to police. They claim they can't verify the age of fictional characters. So, rather than nuance, they demand a blanket ban on anything that looks too young. This is forcing Japanese culture to conform to Western corporate puritanism. It is cultural imperialism enforced through the SWIFT system and credit limits. But let's look at the money. Why now? Why are they cracking down so hard on a relatively small sector of the digital economy right now? It connects to the rise of ESG scores and the push for social responsibility in banking. Banks are being graded on who they do business with. If a bank processes payments for a problematic industry, their own rating goes down. Institutional investors might pull their capital. So the risk officers at major banks like Chase and Wells Fargo are scrubbing their portfolios. They are dumping anything that smells like controversy. This is leading to a massive centralization of the internet. If you want to sell content, you have to go through a platform that plays by Visa's rules. It kills the independent web. It forces everyone onto the big sanitized platforms where the algorithms can control what you see and what you buy. And if you think this stops at adult games, you aren't paying attention. We saw the same thing happen with the Canadian trucker protests. Bank accounts were frozen without a court order. Insurance policies were cancelled. The financial system was used as a weapon of compliance. The mechanisms they are perfecting on indie game developers today will be used on political dissidents tomorrow. It is the same software. It is the same compliance teams. It is the same reputational risk clauses in the terms of service. The precedent has been set. If they can deplatform a game developer because their art style is problematic, they can deplatform a podcaster for misinformation. They can deplatform a gun manufacturer. They can deplatform a climate skeptic. The rail doesn't care who it crushes. It only cares about the code. This is why we are seeing a sudden interest in crypto payment solutions in this sector. It isn't about speculation. It is about survival. Developers are moving to stablecoins. They are setting up wallets because a wallet doesn't have a terms of service agreement. It doesn't have a CEO. But the regulators know this. That is why we are seeing Operation Choke Point 2.0 targeting the crypto on-ramps and off-ramps in the US. They are trying to close the exit doors. They want to ensure that every dollar you spend passes through a checkpoint they control. The war on adult games is really a war on the concept of permissionless commerce. It is a test of how much control the public will accept. We are moving toward a world of programmable money. Central bank digital currencies are coming, and they will have these rules baked into the code. Imagine trying to buy a game, and your digital wallet simply says, "Purchase denied, content violation." No appeal, no human to call. That is the system they are building. The ban on anime games is just the stress test. They are checking for leaks in the containment field. They are seeing if the alternative payment networks can handle the load. They are seeing if the public will fight back or just shrug. So far, the public is shrugging because it's just porn or just games. But historically, censorship always starts at the fringes of society. It starts with the people nobody wants to defend. Then, once the machinery is in place, it moves inward. It moves toward the center. The financial deplatforming of 2024 is the digital equivalent of burning books. But instead of fire, they are using friction. They make it just difficult enough, just expensive enough, that you give up. You self-censor. You change your art to fit the corporate standard. This is the chilling effect. You don't have to ban everything if everyone is afraid to create anything that might trigger the algorithm. Visa and Mastercard have effectively become the Supreme Court of culture. They decide what is acceptable art and what is obscenity. And unlike the Supreme Court, there is no appeal process. There is no public record. There is only a denied transaction and a closed account. So, the next time you see a headline about a payment processor banning a specific type of content, don't scroll past it. Recognize it for what it is. It is a boundary line being drawn. And that line is getting closer and closer to your own wallet. I want to know what you think. Is financial access a human right, or do private companies have the right to starve out industries they disagree with morally? Let me know your answer in the comments below. And if you want to stay ahead of these financial shifts and understand the machinery behind the headlines, please consider subscribing. It really helps us out.